Family, welcome to another episode of Financial Freedom. I am your host and accompaniment on this journey, Derek Brown. Today, we are getting into some more goodies. It's tax season, y'all, and people got a whole lot of questions. So, we got a professional. We have a man with over 20 years of corporate accounting experience. He's done everything from retail to insurance to manufacturing and food services. He has his own growing CPA tax firm. He has a master's degree in taxation from Georgia State University, a degree in accounting and finance from Florida A&M University. He's been an entrepreneur since he was 8. This man is working with the Hope Foundation and Goodwill, assisting their entrepreneurship training programs as a guest speaker, and he's on financial platforms and different panels. He serves as a board member of the Clayton County Library System Foundation, treasurer of the NAACP in the CAB, and a CPA for the Atlanta Black Chambers. Ladies and gentlemen, he is way too overqualified to be here, but he has given us his time. Marcus L. Dorsey, CPA and MTX.
Good morning. How's it going?
Good morning, good sir. And I said this before we even started, but I really do mean it when I say thank you for spending some time with us today. I really appreciate that.
You're welcome. Always happy to help.
Definitely, and that's awesome. I see that from your resume. You definitely giving your time to some worthy causes. Definitely. Well, look, the entire focus of the show is taxes, like, and that's pretty much your MO. And tax season is always confusing. I don't care if you're using TurboTax or if you're going to a professional, or if you're trying to figure out what you can write off and what you can't, or what questions to answer or what you shouldn't. So let's just dive right in. Um,
Okay.
I find people I find that people think of taxes in one of two ways. They think of it as like it's free money, as in a refund, or they think of taxes like it's a savings account and they wait for their taxes to come back for big purchases in the beginning of the year. Is either one of these perspectives the correct one?
That's an excellent question, and I would say that it's not a right or wrong way to view
Hmm.
to view that perspective. What I
Hmm.
would say is there's probably a good way, not necessarily a good way. There's a way to view it, and then there's maybe a better way to view it. And
Okay.
so when I talk to clients, I try to get them to understand that my focus to help is to help them save money, not necessarily on taxes per se, but just help them
Mhm.
save money and to utilize that money, put it to the best work for them as early and as often as possible. The name
Gotcha.
of the game is building wealth, and and not necessarily is even though we pay income taxes, we don't
Right.
pay a wealth tax. So I try to
Mhm.
help them create wealth, and so while you can take that approach and like you're using it for a savings account, but in all actuality, what you're really doing is giving the government a loan for 12 months, and it's
That's
interest free,
I've heard
right?
that. Yeah.
Right, exactly. So you're giving the government an interest-free loan for 12 months. So
Mhm.
my view of the situation is, if a person has a tax refund between federal and state, because I view all of it together. So if you have to pay, because you have to
Mhm.
pay federal and you have to pay state. So if you have a
Right.
combined refund of more than $2,000 or more, then
Right.
we might need to redo some things. And if you owe at the end of the year between the two, again, $1,200 or more, we might want to redo some
Mhm.
things because let's say you're getting a $5,000 refund at the end of the year.
Right.
That's great, but if you were to take that same $5,000, divide that by 12, that's over $400 a month that you could have had in
Right.
your check each month. And
So
so
let
if
me
we take that
ask, 'cause
same refund,
I don't mean to interrupt you, but I think you're about to answer the next question I had, which is,
right.
should we be getting huge tax refunds? Like, are we giving them way too much of a loan just to get it back
Right.
later on with no interest.
Correct. Correct. I mean, that again, that's my opinion. And so so what I do is one thing that I do is I try to help the client by
Okay.
giving them a different perspective, right?
Okay.
So one
Okay.
perspective is, okay, great. I have a $5,000 refund. I can go do whatever. I can use it for vacation or what have you. A different perspective or a different approach would be, what if you took
Mm-hmm.
that $5,000, which is $400 a month, and you had that
Mm-hmm.
money invested somewhere, and you were saving it somewhere in an interest-bearing account where you're paying, anywhere 5, 6, 8%, what have you.
Mm-hmm.
Now at the end of the year, instead of having $5,000, you could potentially have $6,000 or 6,500 or what have you. Um, but
Okay.
which is more than what you got from doing it, the way that you have been doing it and just like letting the government hold the money. So
Gotcha.
it's just a different, it's a different perspective. And then when you take that, so what I do when we take that, and
Let
then
me
I'll
let me
talk to.
let me
Mhm.
pause. Let me pause right there because I think you're about to pivot onto a different subject, and I want to ask you a
Okay,
question because it just came up while you were asking, so I'm a little excited. So
right.
if I talk to you and you go, hey, Derek, you're getting these huge refunds, but what if we can keep that money in your check when you get it throughout the year? Oh, I'm like, okay, cool, Mr. Dorsey. How do we do that? There's something that has to happen on the front end, I'm guessing, to keep that money from flowing into the government's hands so that I can keep it in my check. Is that
Correct.
correct?
That is
So
absolutely
does
correct.
that have to do with how I fill out my W-2 or if I'm a contractor, how I fill out my paperwork? Like that has to happen there, right?
Right. So that would be something we do, is when you complete your W-4. So
Okay.
we make sure that, and sometimes it takes, one or two, we have to go back and forth. We might have to complete it, a couple of times to get the number that we're looking for, to make the adjustments that we're looking for. Um, but yeah, that's exactly absolutely correct. And as far as if you're a contractor, there's a whole nother story behind. I mean, there's a whole nother process behind that because
I believe it.
as a contractor, you don't you aren't they're not taking any money out of your check. They're just paying you. If you work 10 hours at $10 an hour, they're going to give you $100 straight. So there aren't any withholdings coming out of your check in that instance.
Right, right. So, because I often wonder about that because I notice, if you're a single person, it seems like you're getting all kinds of taxes taken out of your check. My friend and I call that castration. Like they just take it, they just getting you like straight up.
Right, right.
Um, but
I
it
think Chris
dawns on
Rock said that. Chris Rock said that they don't take taxes, they jack taxes. It's called a tax jack.
right. You getting hijacked before it even comes to your check. You don't even know it's missing.
Right.
Um, so what do I really need to be paying taxes on? Because now we're getting into that idea of what forms we should be filling out, right? And so if I'm a contractor, it's different. If I'm just a regular employee, it's different. Um, how do I determine my filing status?
So your filing status is dependent on whether or not you have children in the household, if you're caring for them, um, and if you're married, because there's married filing jointly, married filing separately, and then
Mm,
there's single and head of household,
okay.
qualifying widower. So those are the different filing statuses that are available.
Let
And
me ask you
so
this
you.
question.
Mhm.
What's the difference between single and head of household? Can I be the head of household if I'm single? I don't know. Tell me what the difference is.
So if you are single, if you have a qualifying dependent, then you qualify to be head of household.
Okay. Okay. Thank you. I never knew what the difference was. Thank you. I
Got it.
appreciate that. Um, so that's how we determine our filing status. What about our taxation rate? I remember last year we especially with President number 45 in office, we heard a lot about different taxation rates and how different deductions were used. And how do I even know what tax bracket I'm in?
So a quick Google search, and I hate to use that, but a quick search will tell you, where you are as far as a tax bracket. So, but
Hmm.
what that it doesn't, but to help explain that is the number that you see um, when you're looking at the tax rate or the tax brackets. That doesn't really give you the full picture. So
Okay.
if the rate is 10%, and then it goes to 12, so if it goes from 10% to 12%, that doesn't mean that you pay 12% on the entire amount of money that you just earned.
Okay.
That means the bracket. So let's say the bracket goes from 0 to $5,000, right, for the 10%
Okay.
bracket, and
Mhm.
then the next bracket goes from 5,000 to 10,000. So if you
Okay.
earn $7,000, that puts you in the next bracket. We'll call it 12%. So
Mhm.
that doesn't mean you pay 12% on that $7,000. That means you pay 10% on that first 5,000, and then you pay the 12% on the next two. And a lot of people are confused by that. They think that because it's a graduated income rate. Right.
Why? I why? That doesn't even make any sense to me.
Actually, it does, because would you rather pay
Okay.
12% on the full 7,000, or would you rather pay 12% on the amount above the on the amount above 5,000, and 10% on the 5,000?
Okay, so if anything over 5,000 is a certain percentage, so I'm paying a lower percentage rate for anything below that rate, and a higher percentage rate for anything above that
Correct.
5,000. Right.
Right.
Okay. So does that actually, and maybe it would sound like, or it would seem that I'll be paying less taxes with that kind of system. However,
Right.
it also sounds like I'm being taxed twice.
No. No, because if you look at it, you have the first. So if you write it out, you say you have 5,000. The first $5,000, right? You're
Okay.
paying. We'll call it 10%. So the
Okay.
first $5,000 you're paying $500 on.
Hmm.
Okay, and then the next $2,000 you're going to pay at 12%. Was what, $240.
Okay.
Okay, so that's a total of $740,
Okay.
as opposed to paying 12% on the entire $7,000. 12% will be $840. So you save
Okay.
much. So you see what I'm saying? So the
Yeah. I see what you're
smaller,
saying.
so that rate, the second rate, the way it works actually saves you money.
Okay. So that's how that slides. So we figure out, and even though you don't like to say this, but we figure out what tax bracket we're in by possibly just Googling it.
Yeah, so this is probably the one time that I will. This is probably the one and only time you will ever hear me say that googling something related to taxes is a good idea. And the reason that I generally
Okay.
say that it's not is because taxes are intricate, and they're complicated. So
Okay.
when you perform a Google search on something related to income
Mhm.
taxes, it will give you, like I said, it'll give you a static answer. It will give you one answer. However,
Okay.
it doesn't. The Generally speaking, people a lot of times when they're asking questions about income taxes, they don't understand they don't even know if they're asking the right question. So
Hmm.
if you ask Google the wrong question, you're going to get the wrong answer.
Okay.
And
Okay. So
and
I
hold
need to
on,
I need to
and
ask.
then
Go ahead. Go
and
ahead.
and taxes are also, they're interrelated. So there might be one thing that happens, but then there could be another, there could be something else that comes into play, and a third thing that comes into play. But if
Mhm.
you are asking Google this one question, it'll give you that answer, but it can't give you the correct answer if you have all these other things that come into play. And unfortunately, um,
Mhm.
taxpayers don't understand all the different issues that come into play when asking a tax question.
Got you. I didn't mean to cut you off. I just get a little anxious and excited. So,
Right.
with that being said, um, let's say I'm a brother who makes $40,000 a year, and I have
Okay.
dreams of building wealth, and I'm looking at taxes, and let's say I want to own property and I want to do all these great things. However, like you said, I don't know the tax code. So as well as someone like you, and Google is not always going to give me the full breadth of the information because I
Right.
don't even, I mean, I don't even know the right questions to ask. If I'm not balling, when do I go get a CPA like yourself? When do I go get a professional to put on the team to say, I need to talk to Mr. Dorsey before I make this move because I'm not sure how this is going to impact my taxes? Like, when does my income say, hey, go talk to a tax professional?
That is an excellent question. It's probably the bane of my existence. The reason I say that is because I tell people all the time that you want to focus on where you want to go. And if you are
Okay.
happy with this, if you want to keep going in the same direction that you're going in from as far as income taxes are concerned, then
Hmm.
keep doing the things that you're already doing. But if you decide that at some point you want to do something more, then you need
Hmm.
to find and hire somebody. You need to hire an advisor, such as myself,
Right.
that can help you get to where you want to go. If you think of it in terms of sports, it become a starter. You go to the coach and you ask the coach, "Hey, what do I need to do to become a starter?" And then
Right.
you work with the coach so that you can become a starter. You don't
Hmm.
just keep doing the same things you're doing and then say, "Okay, cool. Once I become a starter, then I'll go talk to the coach." That's backwards. But
Hmm.
unfortunately, we view um, tax planning and tax advisors as an expense when realistically it's an investment. It's an investment in yourself and in your financial
Okay.
future. So if you hire, when you hire, come to someone like myself, I
Right.
talk to you about possibilities and opportunities that exist within the Internal Revenue Code as opposed to income tax returns and income tax refunds.
Right. Let me ask you this. If I'm out looking for a CPA like yourself, how do I know if I'm being overcharged? How do I know who to go to? Do I just start at the bank? Do I just ask around to some people? Do I hop on LinkedIn with Mr. Marcus Dorsey and say, hey, or just get on LinkedIn and hit and push in CPA? I mean, what do I do? How do I find the right CPA for me? Because I think we've
Right,
talked with people on the show before who work with clients who make multiple millions of dollars, and
right.
I'm pretty sure I'm not even worth looking at for those people. So
Right.
if I'm like, hey, I want to build wealth too, who do I talk to?
Very good. That's an excellent question. And what I would say to that is, a quick search on the internet will bring up some names for you. We'll
I
give
can
you
see
some
the
names
grimace
of
on your
people.
face
Right,
whenever you
right.
actually
Well,
say that.
that'll give you some names of what you can, call, but you want to interview the people that you're talking to. My suggestion would be you want to talk to someone that is credentialed,
Okay.
that a CPA, an EA, a tax attorney
What's an
even.
EA? What's an
That's an
EA?
enrolled agent.
Okay.
An
What's the difference
enrolled
between a
agent.
CPA and EA?
So an EA is an enrolled agent, and that's a status that is granted by the IRS. And but they are not, but they are usually proficient in income taxes.
Okay.
And there are a couple of different ways to obtain that status. But then a CPA is usually a person that has a background in accounting. And then to take it a step further, you can find someone that is especially astute in taxes that has a master's degree in taxation, such as myself.
So the main difference between an EA and a CPA is education, and also the CPA seems to have a wider breadth of experience, whereas an EA is more geared towards specific taxes.
Correct.
Okay,
Correct.
great. So do I need one or both of those people if I say, hey, Mr. Dorsey, I'm trying to create wealth. I want to buy a house in the next year. I want to eventually, perhaps open a consulting business. Do I need one of those people, or do I need both of those people, or do I graduate up?
So obviously, I'm a little biased on this one, but
Of course,
I
I
would
expected
say,
that.
but I would say you want the CPA because again, the CPA usually has an accounting background. So and the EA may or may not have an accounting background. You
Okay.
can obtain it. You can obtain an EA just by working for the IRS for a couple of years. Um, I think it's 5 years you have to work for the IRS, and then you can have the status awarded to you, or you can go out and take a test and pass the test, and so now you're an EA. But at the same time, when you had that still doesn't mean that you know accounting and you know business. So,
Okay.
but with the CPA, there's the background is rooted in business and finance. So there's the difference, and
Oh,
that's
got you. Okay, so we got about 10 minutes left or so. I want to ask you
okay.
a few questions before we go. One more question about how to find one. How do I know when I'm being overcharged for their services?
Well, I would say to look at the value that you are receiving from that particular provider.
Okay.
There's no scale that says okay, one person charges $100, one person might charge $500. And they both could be providing excellent value for you. It's just a matter of how much value are you willing to have, are you willing to accept or not accept, and what you're willing to pay for. Um, for instance, at the end of the day, what you really want is you want an advisor. And if you have an advisor, a tax advisor, then you're going to pay more you pay more for a tax advisor than you do for a tax return preparer. Um, Advisors are there to help you before you make a decision. That you talk to
Mm,
them, you call them, you have a regular conversation with them, and so you make decisions based off the information that you once you've had these conversations with your advisor, as opposed to having a vendor or a tax preparer where you go make decisions on your own and then you come back in January or February and say, "Hey, Derek, this is what I did. Was that a good idea or wasn't?" And so now you have a tax problem. Whereas if you have an advisor, you talk to them before you make those decisions, and then you avoid those same tax problems. And so,
gotcha.
yes, it's going to cost you more upfront to have that relationship with the advisor, but it's going to save you a lot more money in the end.
And in your opinion, the best advisor is a CPA.
All day and twice on Sundays.
Let me ask you this, sir. I was offered the chance to buy some dependents, and he was like, I got some dependents for your taxes, man. I said, I'm good. I'm all right. Thank you so much. But I just heard different. different schemes when it comes to taxes. And I've also heard of some legit places where, people may quote unquote hide their money in IRAs or certain tax exempt accounts, or put it
Mhm.
in a certain location where, they may withdraw it years later. Are there legal loopholes that you've heard of that my advisor would be able to help me with? Um, because we always hear about the corporations make billions of dollars and they never have to pay taxes. So
Uh,
there has to be something legal that the individual can do to find something like that. Um, Sorry. Three common mistakes you commonly see people make trying to find a loophole.
so I would say, first of all, um, the the first thing that we want to understand is there's no such thing as a loophole when it comes to income taxes. So because a
Got you.
loophole
That's
implies that there was, yeah, exactly. So a loophole implies that there's a rule and they forgot about this or they missed that. Um,
Damon.
Correct. Exactly. So the tax law is just written. Okay. So the things that people do, those aren't loopholes. Those are just following the rules of the game. The
Ah,
issue
okay.
is right. So the issue is a lot of times people um, do not know the rules of the game. So that's why they call them loopholes. Like, oh well, they were able to do this or that because they found a loophole. No, it's not a loophole. It's just a rule in the game. The
Got
difference is, so when I'm talking to the various people and organizations that I talk to, I'll always go back and talk about um, there are two groups of people, right? There's basically haves and have-nots, and
okay.
the people that have wealth, they understand that in order to operate within the law, um, they pay people such as myself to explain to them how the tax code is written and
Okay.
how they should and how they should move money around within the tax code. It's not a loophole, it's just written and they know the rules of the game. The issue
Okay.
is people who don't understand that, they think that there are loopholes and there aren't. So they won't pay someone such as myself to explain these things to them, but they want and they think that they are beating the system when they when they buy kids for dependents, or they quote unquote cheat on their tax returns, and so they have you know they I've actually had a person tell me, oh, so I have a business, and so I have this business that I started for income tax purposes. I was like, okay, so that's tax evasion, but we can have that conversation a little bit later. So
That's
so a
tax
lot of
evasion.
people don't, yeah, a lot of people don't understand that, and unfortunately, that's not a tax strategy. And so when someone tells you that, hey, so you can start this business and for tax purposes, that's the same. That's called tax evasion, and
Right.
so that's a crime, and you can go to jail for that. If you think about it, Al Capone is one of the most notorious gangsters that ever lived, right?
Right.
But and everybody knows that he eventually went to jail, but they didn't catch him for robbing, they didn't catch him for murder, they didn't catch him for racketeering, they didn't catch him for selling alcohol during prohibition when selling
Right.
alcohol was illegal. What they got him for
Right.
was tax evasion. So
Mm.
so tax evasion is real, and it is a thing. So you want to make sure that the things that you are that the strategies that you are implementing in your tax planning are really strategies and not tax evasion.
Thank you, because that's a whole different mindset. Because what I hear so commonly is, "Let me tell you the secrets of the wealth."
Hey everyone, welcome back. This is another episode of Decoding Wealth. I am your host, Daniel Duhart. Today we're going to talk about the generational wealth guideline. In my opinion, generational wealth is something that's not talked about nearly enough. And I think it's due to a couple different things. One, due to the lack of knowledge or understanding. And then ultimately, I think that it's very uncommon or unfamiliar in a lot of communities. And so for future generations, it's something that's never addressed. And so today we want to give you that guideline on how you can grow generational wealth and start something different for your family. Today I have a very exciting guest, somebody that I was really looking forward to being a part of this. I call him the young generational wealth guru. He's someone that's very knowledgeable about the topic, and I knew that he would be perfect for it. So at this time, I want to introduce my guest, Mr. Justin Brown. Justin, how are you?
I'm good. Thank you for having me.
Thank you for joining me. I could tell that this was a topic that you were excited about. Before I even told you when it was, you said yes. You were ready to talk about generational wealth. So,
absolutely.
Before we dig into the weeds and really talk about generational wealth today, man, if you will, just take a few moments and introduce yourself.
It's pretty simple. Just as Daniel said, my name is Justin Brown. Grew up here locally in Georgia in Clayton County. Went to Lovejoy High School. Went ahead off to South Carolina for college. Went to a small HBCU there. Did my 4 years there. Studied finance and communications. Played not professional, but played college football.
Right.
Went ahead and tried to pursue the professional route.
Yeah.
I had my time, I had my fun, but I guess it was just time to shift into finance and the finance industry. So that's how I pretty much came aboard as the young generational wealth guru, as you mentioned.
Right.
And that's just, a small little background about myself.
Absolutely. So, one of the things that I will say, man, I have to say hats off to you, because for someone that's your age, 35 and under, I think it's very rare to see someone that passionate about generational wealth. I know with a lot of people that I know, typically that light bulb doesn't come on until later in life. So it's interesting and to see someone your age to really want to push that initiative. So to start from a basic overview, what does generational wealth mean to you?
I personally believe it's two key components. One of those key components being freedom.
Right.
And I believe the second component is legacy. I don't believe you can have generational wealth without either or.
Okay.
And I don't believe you can have one without the other.
Right.
So I believe those are the biggest key components in defining what generational wealth means.
Makes sense. And, of course, with us being close friends, I know a lot of the things that you're doing in the community, and I know that it's something that you're really, really passionate about. So when it comes to, teaching people and helping people implement generational wealth, where does that passion come from? Where did that spark from?
Probably, I would probably say that came from a place of it not being implemented into me when I was younger.
Okay.
So, you grow up and you see things that you don't have or see things that you're not getting. And once you obtain the knowledge on the things that you weren't getting, it's always important to implement it back to those same communities and environments that you weren't getting it from. So that passion and that hunger to want to be able to show people and teach people how simple and pretty much how easy it is to obtain generational wealth came from not having someone teach it to me.
Right. And I can relate to that in so many ways because, with me being, of course, in the same industry, I can truly say that, just in the last few recent years is when I really grasped the understanding of generational wealth.
Right.
Growing up, it wasn't anything that I heard of, whether it be from grandparents, my parents, aunts, uncles, or anything like that. That topic just was never brought up.
Mm-hmm.
And so I think that now being in this industry, I have not only learned more about it, but I've been fortunate enough to talk with individuals that have benefited from it. And so when you really understand generational wealth and how it can change the dynamic of someone's future, it's really powerful. I have one client that I deal with that, they benefited from it in a way to where the grandparent, when they passed away, they left him and his sister $250,000 apiece. And so what it allowed him to do was jumpstart a business that is now 10 plus years in and really successful,
Right.
just off, his grandparents considering and thinking about generational wealth. Also had another client that he pretty much, same situation, but his parents funded an account when he was young. And so when he was of age, I think in his middle 20s, he received pretty much almost like an annual salary
Right.
every
Yep.
year for 10 years. And it really jump-started him to be able to start a business. He was able to make a decent sized down payment on his home and do some other things, pay for a wedding, so on and so forth. So when you really understand how it can change someone's future, it's something that you want to implement in your family, and hopefully you can set that precedent so that now your kids and grandkids can do the same thing.
I think it all stems from knowing and not knowing.
Right.
When I was growing up, me and all my friends and even my family, we always thought, wealth was created by luck.
Right.
Someone lucked up and
Right.
now the whole family's
Right.
good. Instead of understanding that there are systems and systematic principles in place that are easy to implement into anyone's household and family that will literally set you up for generations to come. So I believe, that's really the reason why I do what I do, if you want to put it like that, simply because it's just stems from knowing and not knowing, and goes to the phrase, if you knew better, you would do better.
Right.
So
Yeah, and I think too, like you said, sometimes it's just a matter of seeking help, and for you to realize that it's actually a little more simpler than you would think.
right.
But it's just one of those things, because you don't know about it, you kind of shy away from it and you just never address it. So, and we'll dig into a couple of the different principles or strategies and how you go about advising clients as the episode goes on. But those were